Housing sales are showing signs of recovery, according to new data from the Canadian Real Estate Association. January home sales are up 22% over last year, the largest year-over-year gain since May of 2021. And the actual national average home price was $659,395. That's up to 7.6% from January of last year. So what does this mean for Canadians? What does it mean about affordability? And what does it say about the strength of the housing market going forward? Shaun Cathcart is senior economist at the Canadian Real Estate Association, and he joins me now. Shaun, it's good to meet you. Thanks for joining us. So two good months here. Like December saw a jump in sales, and you were cautioning not to read too much into that. What should we read into it now that the January sales are up too? Is this a trend? How should Canadians see it?
Yeah, I was trying to sort of borrow from the Bank of Canada to say don't get too ahead of yourself, but 2 months in a row, that's more of a trend than 1 month, and it actually advanced further. The one thing I would say would be, a lot of the year-over-year stuff the numbers that look big are a base effect from how weak it was a year ago.
Yeah.
But certainly it's getting going. It looks like it's getting going earlier than we would have thought.
We have more certainty maybe over the trajectory of interest rates. I know the Bank of Canada says not to get too excited, but the markets are baking this in, and you're seeing, some mortgage rates are coming down a little bit. Is that lessened anxiety? Is that fueling some of this, do you think?
It might be. I'm not sure where the normal consumer is. We track this stuff daily. And so, from a month ago when markets kind of were getting ahead of themselves a little bit, talking about the first cut for sure in April, there's going to be 5 or 6 this year. Now it's not till June or July, and maybe there's only going to be 3.
Yeah.
So it moves around a lot. I think the Bank of Canada is going to be very happy that expectations are moving in that direction, because one of their big fears is this market really firing on all cylinders again this year, even with rates still as high as they are.
Right. So we are seeing a price jump, though, right? Prices, the national average home price going up 7.6% year over year in January. Is that just because of how bad it was a year ago? Is there something else happening here?
Part of it's how bad it was a year ago. Part of it is compositional. When you've got markets in and around Toronto and Vancouver where a regular family bungalow is $1 million, and there was nothing going on last year, and that demand is what's coming back in big numbers, because of course, the further you fall, the more room you have to bounce. Calgary and the Maritimes are doing just fine, but they have less room for growth. So when you've got those relatively expensive homes that aren't mansions, but they are expensive in terms of the broader Canadian sample coming back in, that can boost the average over and above what prices are actually doing. Our constant quality measure is still pretty flat year over year.
So help me understand this. Is it the big expensive real estate markets traditionally in Canada that are coming back? We're talking GTA, lower mainland of British Columbia, Calgary. I mean, what are we talking about here? Where is this growth and activity coming from?
Well, I think in the fullness of time, it'll be everywhere. But it seems like in the last few months, it's in and around Toronto, in more expensive places that are really, how do I put it, crawling themselves out of the basement. So yes, some of those numbers look big on a year-over-year basis, but compared to somewhere like in Alberta or the Maritimes, where markets have been far less impacted by higher rates, it just sort of, I almost want to say in Calgary, they didn't get the memo. So there's less scope for that to even go higher. They're already almost setting records. So it's really a mixed bag right now. It's a mixed bag of data, but it's definitely the green shoots we were sort of looking for that we normally look for in February and March, sort of showing up in December and January in a year where we know there's a ton of pent-up demand out there and population growth that looks like a hockey stick in the last year. It's hard to see how there won't be a ton of demand for housing this year.
Right. So I actually had a real estate agent knock on my door yesterday to ask if I wanted to list my house. And I was like, no, thanks. I don't have that in me right now. But you said that, these trends suggest a market that's starting to turn a corner. What kind of timeline do you think we're on there? And what should people expect in terms of this to progress?
Well, be careful with my comms people. They don't like me to say shoot off the starting gun. So I'll say wave the green flag for the spring market. But I've seen years like this before. 2020 was one after coming out of the stress test. And of course, that all went pear-shaped with COVID. But I have seen this before. Whether it's Valentine's Day, which is today, we start to see the green shoots show up after, or whether it's the 1st of March or March break or Easter, somewhere in the next couple of months, we're going to start to see a lot of listings come out, and I think that they're all going to start selling. And I hope that there's listings, and then we just have more activity. We get more people into housing because I know the demand is there. We've had 2 years of people not flowing into this ownership market. Of course, the rental market has predictably gone completely bonkers. And so we want to get people flowing back in that direction on the continuum and sort of balancing things out, ideally. And so ideally, we get a lot of listings because there's not a lot out there right now.
How do we reconcile, this jump in sales, the jump in prices, with the conversation about lack of affordability and houses being too expensive for people? And it seems like, and high interest rates, taking a lot of the financial power away from people. Yet here we are.
Yeah, the way you could reconcile that is by looking at the homeownership rate in Canada, which has been falling for the last 13 years. And so how do regular people afford these prices? Well, more and more regular people don't. And so that's why we've been advocating heavily. I mean, internally here at CREA for 7 years on this supply side is the only solution to build like you've never built before. I think that conversation needs to evolve now. If you look at some of the numbers that are coming out of CMHC and others saying that we need to scale our current construction by like 250% starting yesterday, that's not possible with the status quo, with, building techniques where my grandfather could pop out of a time machine from 1955 and start swinging a hammer. I think we need to evolve that conversation into innovation in the construction space, because unless we start building hundreds of thousands of units a year, more than we are right now, this problem isn't going away.
Shaun, we appreciate you joining us today. That's Shaun Cathcart with the Canadian Real Estate Association. Thanks so much for your time.
Anytime.